Good morning, good morning, good morning. It is Tuesday, the 31st of March, all day. It is the last day of the month. It is the last day of the quarter. And this is the Morning Blast with myself, Ryan, and of course, Mr. Michael Brown. Just a quick one for those that may be your first time listeners and whatnot. As usual, we will be doing a very, very candid takedown on what's going on in markets. The podcasts are labeled as explicit for a reason. We do not pull our punches. Nothing we say, though, is trade or investment advice, because you'd be an idiot to just trade on the back of something you listen to on a podcast, or indeed listen to or read on social media. A quick, before we get let's set the scene. So before we crack on with an update from our dear friend Clive Lambert at Futures Techs. So obviously it's day 32 of Operation Epic Fury, closing out Q1 with Brent north of $107 a barrel, S&P down more than 7% for the quarter. And the war is showing no signs of really ending before April 6th deadline that Trump's discussed previously. But again, we'll go over this in more detail in a second. Trump has posted overnight claiming serious discussions are underway with more reasonable Iranian regime. Tehran obviously denies this, and the Houthis are back in the fight. But Michael, before we crack on with Clive,
finally, you're going to let me get a word in edgeways.
Well, I thought it'd be nice just to set the scene, and then we can go into more detail.
I was just about to drop off the call. I thought you could manage it all on your own, mate. But a very good morning to you nonetheless, Ryan. Good morning, everyone. Finally, we've made it to the end of what has felt like the longest first quarter ever, to be completely honest with you. I mean, we'll go into that in a bit more detail momentarily as well. But yeah, suffice to say, it's been quite a ride over the last 3 months or so. And I think you'd be a brave man to bet that things are going to calm down any time soon.
Well, yeah, hopefully we're jinxing it, and hopefully that means that it will calm down by the end of today, perhaps. But
I've tried everything else, so I thought I'd go for a bit of reverse psychology now instead.
Obviously, if it did, then we'd all be in a state of shock. But before we crack on and go into more detail, what was that?
I don't know. I didn't hear anything.
Oh, sorry, that was some weird noise that came from my.
I moved. I don't know whether that caused the problem, but.
Anyway, before we crack on in more detail, let's get an update from our good friend on the market levels and market moves, etc. to watch. Clive Lambert over at Futures Techs. Obviously, as most people know, me and Michael aren't a massive fan of technical analysis, but Clive is extremely good at it. So for those of you with an eye on it, here's the stuff for you. There were obviously a few moves overnight, month-end flows. Drink whenever you do that. S&P hit our first target as 63.63 yesterday, but Marabou's resistance at 64.67 weighed on the recovery. Nasdaq now trading at levels last seen last September. Well, as Clive went to print, this rallied yesterday, but bears responded. And we've seen another rally overnight. We'll see a similar reaction. So will it see a similar reaction? Obviously, time will tell. The DAX posted another piercing pattern, which is page 84 of the book, apparently. Thank you for pointing that out. Clive does have
Sadly, I don't have the book with me.
But I have, but it's propping open the door. Last week, didn't see any follow-through, though, so not getting too excited. FTSE futures, they rallied yesterday, and that's now retesting the 10,152 level, which is Fibonacci level we've been watching right now. Bund futures bid again this morning after gains yesterday, still bearish. T-notes put on a reversal pattern on the daily chart, a variation on a morning star, not morning glory, for those getting confused. US dollar saw gains again yesterday, euro dollar getting down to 114.43. Cable is now testing Fibonacci support of 131.92, making a new low for this move yesterday. Gold, the yellow metal, and silver rallied overnight. $75 is a big resistance higher up in the silver market. Elsewhere in metal space, zinc continues to rally after holding its 200-day simple moving average last week. Aluminium gapped up yesterday on the back of, obviously, we heard the large smelter in UAE being hit. 3,375 and 303 are now supports. 3,546 and 50 cents is the recent high. Oil saw weakness overnight. Brent crude selling off from 110, the big figure, to 104.72 while we were sleeping. We now have a short-term uptrend line at 98.64, so still a while away from that one. So kind of caught in this kind of limbo land where $5 swings that aren't really out of question anymore. Gas oil, which obviously a reminder is basically European diesel, still shy of gap resistance at 12.82. The only level stopping a move back to 14.15 and 50 cents, the recent high. This itself is just shy of the all-time high of 14.22 and 50 cents, set in 2022. TTF, European benchmark gas, is now trading in the May delivery month. This is still shy of resistance at 56.94 and 58.56, which is something for the bears. Even if gap support is 53.50, is still holding. So keep an eye on that one. Euro carbon market saw a move higher yesterday, getting up to 73.97. On any further gains, 74.74 to 84 is a resistance target that we've been talking about for a while now. And that's it from Clive. Thank you, Clive.
Very good. Thank you, Clive. Thank you, Ryan. Let's start with the Middle East. I guess that's going to become tradition now, sadly, and then we can move on to other bits and bobs.
It is day 32, right?
Yes, it is. Yeah, because it's whatever we've got in March plus one, basically.
There you go.
The way I've been working it out. So
why didn't I think
be fucked tomorrow?
Why is it taking me to the last day of March to kind of put that together?
I don't know. I'm surprised that you've even worked it out at this point, to be completely honest with you.
Plus one.
So, where are we this morning? I guess a couple of kind of major points from yesterday. We did have a Truth Social post from President Trump midway through yesterday's session. He said, on the one hand, that great progress has been made with Iran and that they are in serious talks with a new regime, which will probably mean that a deal between the two sides is reached. So that's all positive. But then in the same Truth Social post, Trump said that if the Strait of Hormuz is not immediately opened after a deal is done, then the US will, quote, obliterate all power plants in Iran and blow up Karg Island. So on the one hand, he's saying things are going really well. On the other hand, he's saying if things don't go particularly well, we'll blow the shit out of you, essentially, which, to be honest, doesn't really move the narrative on particularly much.
The interesting thing here, though, is he's kind of increasingly saying that things are going better and negotiations going better. However, he seems to be the only one in the conversation that seems to be saying that, because Tehran straight after was saying we have no idea what this fella's talking about. So as we did mention yesterday, that we have got to be careful of, kind of there is a difference between what is being said by Trump and what seems to be actually happening. But is this all a play and all a ploy so that if Trump does decide to walk away and back away, he's just basically giving himself an out? Yeah, we've spoken in the past about creating off ramps, where it's like Trump's like just invents off ramps via the toilet when he's tweeting.
Yeah, and I mean, frankly, I think only Trump knows exactly what's going on, and even then, I'm not entirely sure he has a defined plan or strategy. But you're right, it could be a case of creating this illusion that there's talks in order to buy time to do something else, whether that be an escalation of the conflict, whether that be walking away, whether that be getting a deal done, who knows? But I do agree. I think it is interesting. Although I would say that, although Iran are saying publicly that there are no talks, they're also saying publicly, we heard from Tasnim yesterday, one of the state media networks, saying that the US demands put forward in negotiations are, quote, excessive and illogical. Well, if you're not talking to each other, how do you know the demands that they've put forward in those negotiations? So I do think there's probably more going on than the Iranians would admit. But I think it's also probably quite safe to say that we're not at the point where, all sides involved are sat round table having a conversation, because, well, quite clearly that's not happening. So, whether this is mediators being involved, back channels being used, we don't know, but I think it's probably somewhere in between no talks at all and full negotiations. Yeah, that's a very, very broad spectrum, I know, but there's clearly some communication happening.
Yeah, just one thing I want to pick up on as well, just because literally I just saw it just now. Javier Blas, very, very good person to follow regarding Bloomberg. He's a Bloomberg columnist and reporter basically on energy and commodities. Very, very good follow for oil market. And also, what?
Fuck's sake.
What?
Sorry, I can't read it out, but Clive's just sent us a WhatsApp message.
God, Michael loves a bit of back channel action. I'll read it out. We also love a good pushback story on this show. But yeah, so, Javier Blas, right, and Rory Johnson, they both picked up on the fact that in a Goldman's noted that some investors or traders, whatever you want to call them, have been buying $450 strike options. Now, what I'm going to tell people right now is
doesn't mean they think oil's going there.
Exactly. Right. Just do not think for a second that that means that they're piling in, putting big bets on it. These $450 strike options will be cheap as chips, and they're lottery tickets. They're just things to have on that means you get a good payout if it goes anywhere near that in any rapidity. And vol spikes up. They are just hedging mechanisms and just lottery tickets. That's all these are. Now, that's not to say that if the world falls apart and Carg Island gets destroyed and all this, and then fucking it all kicks off, that $450 isn't possible, because of course it is possible. But is it likely just because people have bought $400 strike options? No, it's not. So just stay away from anyone that's suggesting that $450 options are a sign that that's where we're going. They're not. They're cheap as chips. They're lottery tickets that people will be selling them far before we get up there. They're just and also they're just hedging mechanisms.
So, yeah, exactly. It's one of those, and you do see this quite often, not just in crude, but markets more broadly. It's one of those things where it makes a really good media story. People are buying options on $400 crude, or the S&P to trade at 7 by the end of April, or whatever the fuck it is. But at the end of the day, those options basically cost nothing, and they will be profitable. Depending on what happens in the market, way before they get to that point. It is just a lottery ticket. Go back to the geopolitical stuff. The other thing that is worth bearing in mind, and the reason why we've seen equity markets taking a bit of a leg higher in terms of early doors this morning, the S&P future trading up by about 2/3% overnight. Up by 0.9% now, as I've just opened Bloomberg. They're not all numbers, as we know. The reason for that, seemingly on the back of a Wall Street Journal report that we had during the APAC session, with the Journal noting that President Trump has reportedly told aides in the White House that he's willing to end the war with Iran without reopening the Strait of Hormuz. According to these sources that the Journal cites, President Trump has decided that the US should achieve the main goals of the mission, which is, of course, hobbling Iran's navy and destroying missile stocks, with Trump then planning to wind down hostilities while, quote, pressuring Tehran diplomatically to resume the free flow of trade. Reportedly, it has been discussed and assessed within the White House that the mission to reopen the Strait of Hormuz would push the conflict way beyond the 4 to 6 week timeframe that was initially outlined. Now, do take this with a little bit of a pinch of salt. It is a source's story, and we have had lots of them. Not all of them have been strictly true. The other thing I would say is that, yes, that is what the Wall Street Journal are reporting, but we also have the US continuing to build up military assets in the region. Some Marines arrived over the weekend, some more Marines are on their way, etc., etc. So it could be very much a case of one of those kind of trial balloon stories of the US putting this into the media, seeing what the market reaction is, seeing what the general population reaction is, what allies say on the back of this, and that may then dictate what they do moving forward.
Sorry, go on, just finish.
I was going to say, the other thing I would say is I would just take the market reaction with a little bit of caution, because yes, again, there is a signal in here of Trump wants to de-escalate, but there's also a signal in here of, well, if Trump has essentially walked in, made a mess, if he then fucks off and says you lot can clean it up, I'm not entirely sure how that situation pans out in the medium and longer run.
No, quite. Just a couple of things to note on this. One, we have been increasingly saying, we did actually spell it out yesterday, that that Trump might just say, do you know what, I've done what I've come here to do. Fuck the strait. I don't need it open. I'll leave. I'll basically walk away from a steaming pile of shit and leave you guys in the Middle East to sort it out. That is basically what the tweet suggested he would be looking to do, or the kind of the report from Wall Street Journal would be looking to do. We're not saying that is what he's going to do, but it's increasingly likely that that's an option. Again, another off ramp for him. Regarding the military build-up, obviously, there's been a lot of kinetic action, et cetera, going on over there. And just kind of looking at the playbook per se, we did see, a huge military build-up on the, basically on the coast of Argentina. Sorry, not Argentina, of Venezuela. It's not the Falklands again. Although that would be good. But yeah, we did see this huge military build-up on the, just on the coast outside of Venezuela. And in the end, all it was one overnight strike, which was just, a couple of helicopters going in and and taking your boy out. So again, it's very difficult to try and read too much into anything regarding troop movements and stuff, because ours is not to wonder why, etc. As a lot of this is just in case situations, so you have got people there ready and waiting if stuff does kick off. But it as Michael's alluded to, and I think you'll agree that it could go anywhere. But I think my base case remains that boots on the ground, very unlikely. Increasingly, my base case is he walks away from here without the strait being fully opened. And when he does walk away, the Iranians will probably look to open it.
Yeah, and that then leads down the route of what is the risk associated with transiting the strait if it's under Iranian control? Are Iran looking for some sort of toll to be paid? I mean, you could argue, and I think there is a case for this, certainly for and we're jumping miles ahead here because of course the war is still going on. But you could argue that actually a scenario where, for instance, the Strait of Hormuz is reopened under Iranian control, there's a toll that must be paid of a few $100,000 or whatever it may be per transit. I think a lot of certainly refineries in Asia would probably say, well, actually, do you know what? In the grand scheme of things, that's not a huge fee. We guarantee safe transit. We can resume energy flows. I think that is actually, people are saying that there was one, I can't remember if it was, someone on Twitter said that, Trump walking away and leaving Hormuz closed could be an economic disaster.
Yeah.
I think that might be slightly hyperbolic. I don't think necessarily that you can correlate the two, because if the US were to walk away and Iran go, well, we'll let any ship through Hormuz as long as you pay us X, well, that then just becomes a cost of doing business. Yes, that's a higher cost of doing business. Yes, it has, inflationary implications potentially coming with it, potentially, negative demand implications, blah, blah, blah. But it's a better situation than you're in now, where no ships are going through at all, compared to where we were this time last year. We got 100 transits a day.
Yeah, exactly that.
But again, we're kind of jumping, massively ahead there. The situation at the moment on the ground is that the strait is still essentially impassable. You've got 2 or 3 ships going through every day. But there we are. Where do we want to go next, Ryan?
Well, it's up to you, mate. Where we can do just like an end of the quarter, end of the month, a little look back.
Well, let's do that first, and then we can sort of zoom back into the day ahead, because I was looking at this for my note that I sent out to clients this morning, and it has been probably the longest 3 months that anyone can remember for a hell of a long time, if not ever. It was the 3rd of January, right at the start of the year, when the US staged that intervention in Venezuela that Ryan alluded to earlier on.
And that genuinely does feel like it was years ago.
It really does. And one of the guys on the desk this morning asked me what's happened to Maduro since. I was like, well, I don't actually know. Turns out he's still sat in prison in New York. So clearly not a lot has happened. A lot has happened in markets, though. I've pulled out a list, so I will just run through it very briefly. We obviously had that US intervention in Venezuela. We had the weekend after the Department of Justice issuing subpoenas to the Fed, ostensibly regarding their building renovations, but in reality trying to pressure Powell into lowering rates. Then we had Trump threatening tariffs on Europe and other allies over control of Greenland. Then we had Kevin Warsh nominated as the next Fed chair. Japanese PM Takaichi won a landslide election in those lower house elections in early February. The Supreme Court in the US struck down the IEEPA tariffs, which are now, of course, being reconstructed under other parts of commerce law. We've obviously had conflict in the Middle East, of course, the build up to that in February, and then the breakout of war in March. Jitters around the AI trade, they certainly haven't gone away. People fretting about private credit, that hasn't gone away either. And there's probably been more than that I've completely forgotten about, because so much has happened. And markets have actually reacted very much as you might expect. Volatility has shot through the roof, to be completely honest with you. The S&P March has been an absolute bloodbath, and that is set to take the index to its worst quarter in 4 years. Bonds have just sold off relentlessly. The 10-year gilt yield is up 50 basis points in the first 3 months of the year. And then obviously, you've got Brent, which is on track for its best month ever this month, assuming we don't have some sort of cataclysmic decline today, and also its biggest quarterly advance since the early 1990s. But amid all of that, I think the biggest story for me me is the dollar, firstly, which is set for a third straight quarterly gain. So all of those people who are saying the dollar is dead have probably got egg on their faces. But also gold, because gold is up by 5% in Q1. And that is with the big crash that we saw at the end of January and the huge lurch lower that we saw over the last couple of days.
I was going to
the
say,
yellow metal is still just about positive on the quarter.
Yeah, exactly that. And it does feel like the gold one's an interesting story because, gold, flight to safety, etc., etc. Big war in the Middle East. Instantly, it's very easy to say, well, that means gold should be even higher because of the flight to safety. But obviously, as we have mentioned on the show many times in the past, potentially the reason why it hasn't been an automatic flight to safety, not saying it won't become a flight to safety, but I think the reason why it didn't, I think the reason why it wasn't to begin with during this conflict is because things were so volatile, correlations between everything went to one, and people were just selling whatever they could sell in terms of to get fast money in like liquid markets. Sorry, liquid, not illiquid markets, to fund other positions. And I think that's the reason why, and we haven't mentioned this before, is like sometimes, yes, gold should be the safe haven, but if things go really bad, gold actually gets hit. We've seen this, we've seen it over COVID, we saw it, during the GFC, etc. When markets get really, really fearful, they will sell whatever they can to fund positions up in other places. And gold tends to be one of the first things to be sold because it is incredibly liquid markets and it's very easy to shift off your balance sheet. Well, I say shift off the balance sheet. I say to convert to cash on your balance sheet to fund other positions. Now, if things do start settling down a bit, which touch wood they will do, that's when I think you see this bid come back into gold. So it will look a bit peculiar because you'll see a safety bid go into gold, even though things appear to be safer in the world. But I think it's just the way the market dynamics are happening. It's some of these. Sometimes we see this in the multiple markets that when under extreme stress, things kind of look to be working the opposite way around than you expect it in the book. If you see what I mean.
Yeah, no, you're absolutely right. And what I'm going to say is going to sound like the least profound thing in the world, but gold is a safe haven until it's not. Yeah. There's a kind of delicate balance, and there's probably going to be some quant fella out there who's going to find a million variables to determine the exact turning point. Well, if that gets you up in the morning, off you go. But the point I'm trying to make is, gold is a safe haven when things are looking like they might start to get dicey. Once things actually do get dicey, gold suddenly isn't a haven because you'd rather have the cash instead.
Yeah, you kind of need to be in that Goldilocks zone, right?
Oh, very good.
Yeah, see what? Oh, God, do you know what? I didn't even
fucking awful.
Do you know what? I didn't even know I did that until you pointed it out. Oh, God.
But there is, and I think there is that kind of, and this quarter has spoken to that, and certainly the last month or so has spoken to the fact that, and I'm not as sure, we certainly haven't seen markets dissolve into sort of disorderly conditions, but in times of strife and in times where participants are concerned about the outlook and can't price the outlook, the real haven is cash at the end of the day.
Yeah, no, exactly that. And like when I say Goldilocks zone, obviously that was a complete accident. But like if things are, if the world is going swimmingly and stocks are soaring and rates are fucking negative, whatever you want to call them, gold obviously is not going to be a good bet. If things are going extremely very badly and people need to get money out of the system as quickly as possible, gold also won't be doing very well. But you need it like a little bit of risk, a little bit of fear, a little bit of inflation, but not much. And gold's your one. But anyway, what have we got to look forward to today, my dear?
And the inflation point is a good one because that's one of the reasons why gold has struggled so much of late, because the inflationary impulse is expected to be so large that it actually is causing a massive sell-off in rates. And obviously higher rates are bad news for bullion.
Yeah.
Anyway, before I do that, do you want to make a call for something that might happen in Q2? Are you brave enough?
No. Hey, I've just looked back at you just told me what's happening in Q2. Q1. Absolutely no chance I'm going to guess what's going to happen in Q1. Q2. Tell you one thing though, and this is talking my own book slightly, I have been saying a little bit, for the last week or so about coal being a success story on the back of all of this for potentially at least going out for the rest of the year. I did decide to have a little nibble of Glencore yesterday, just as it broke a new high, and touch wood, but although there's nothing scarier than a trade that goes immediately on side.
No.
So I'm expecting this to be massive egg on my face, but I do think coal and stuff like that would be, will be this success story, because we're seeing in the Far East basically plants being told to run at full capacity. India have removed all rate limits. We're starting to see a warming back to coal in Western countries as well, just because there's no other option. Yes, I think Glencore very well placed for that. Not trading or investment advice. Do not follow me, because I've gone on side straight away, which normally means something really bad's going to happen.
But it is a sound theory nonetheless.
Yeah, exactly that. But okay, so what have you got? Have you got any predictions?
The BOE and the Fed won't hike rates. There you go.
In Q2?
Well, this year, I would say. But
yeah, I definitely in Q2. I'm reluctant to kind of guess what's going to happen towards the end of the year.
Well, I'm reluctant to guess what's going to happen tomorrow at this point, if I'm being completely honest.
But I definitely think the pricing is wrong, though. If they do hike, it might be one.
Yeah, I think the pricing's fucked, to be honest. But there we are.
We could see a hike and then a cut, or a cut then a hike in the next 8 months.
Easily, yeah. Anyway, let's go back to today. It is obviously the last day of the month, last day of the quarter, so there is the potential for drink end of month, end of quarter flows to be in the mix. Do bear in mind, though, actually, I know we use it as a bit of a cliche and a bit of an excuse, and I'm as guilty of that as anyone else, but a lot of funds do kind of dynamically rebalance things these days. I think everyone woke up a while ago and went, why are we waiting until the end of the month to sell a load of stocks and buy a load of bonds when we could just do it through the month instead? So the impact of that is not as significant as it once was, shall we say. Yeah. As for the data docket at 10 o'clock this morning, we get the latest inflation data out of the Eurozone. Headline CPI is seen having risen to 2.6% on a year-on-year basis in March, up from the prior 1.9%. That would, of course, be entirely driven by energy prices and would be the fastest pace of headline inflation since July of 2024. Core inflation, meanwhile, which of course strips out food and strips out energy, that's expected to have held steady at 2.4% on the year. Money markets in the Eurozone price the April meeting is about a coin flip for a 25 basis point hike. A 25 basis point hike is, though, fully priced in by June, with the curve discounting around 74 basis points of tightening, so essentially 3 rate hikes by the end of the year. Elsewhere today across the pond, we get the latest GDP stats from Canada. The economy is set to have stagnated on a month-on-month basis in January. Come on, it's far too sales to matter at this point. And then from the States today, we get the latest Chicago PMI numbers from the MNI. Of course, that data is due at 2:45 for most of us. It's out 3 minutes early for people who subscribe to MNI. It's expected at 54.6, down from the prior 57.7. Also from the States today, we get the latest consumer confidence figures and job openings data, although that job openings data is for February, so again, a little bit stale. Besides that, a handful of Fed and ECB speakers are due on the wires, and after the market close, we get earnings from Nike. But of course, geopolitical events will be the main focus for markets as we move through the day ahead, albeit, it must be said, the day ahead is starting on a relatively optimistic note, so we'll see how long we can hold on to that vibe.
Well, fingers crossed we can hold on to that vibe. Again, talking various books that are under my ownership. One thing I will throw in there as well, firstly, I hope everyone's had a great first quarter, a great month, and I hope we've added a bit of value and you've enjoyed listening to us. Word of warning, bear in mind it is the last day of the month, last day of the quarter, drink. Trump, if he's going to try and pump the stock market any considerable way, today would be a great day to do it, so he gets a better closing price for the month and the quarter.
I was going to say, does he mark to market?
I bet he does. The last 2 days we've had 2 or maybe 3, you could argue, messages from Trump that kind of trying to pump the market. Don't be caught short, or don't literally and theoretically, don't be caught short or kind of surprised if Trump does come out and say something today that really does try and pump the market. Just keep on your toes and stay in front of your screens if you can. But I think that's it from us, isn't it?
It is. Yeah, nothing else from me.
Perfect. Well, look, guys, as I said just now, we do wish you've had a great month, a great quarter. Here's to the next